Now, if you ever ask anyone in their right mind if they'd like to pay their mortgage off faster and have more money to enjoy their life, surely the answer would be yes. If that's you, well, perhaps you'd be interested to know how to pay your mortgage off in 10 years, even when interest rates are going up. Because this is the exact title of a new book from best-selling finance writer, money coach, and host of the Joyful Frugalista podcast, Serina Bird, who I'm very pleased to say joins us on the Savings Tip Jar today. Serina, welcome.
Thank you so much for having me.
Thanks, Serina, for being here. We'll just talk about what the title of your book is essentially about, how to pay your mortgage off in 10 years. So how did that come about? How did your journey to owning and paying off a mortgage result in it being paid off in 10 years?
Well, it certainly wasn't straight. It certainly wasn't straightforward. And I think I probably did it in the most circuitous way possible. So spoiler alert, I'm in my second marriage and I separated from my first husband, not in the best circumstances. In fact, I took out a domestic violence order and I was a single parent for a while. In our case, we had quite a few investment properties. So once we got all of that sorted out, I was actually quite lucky in that I did come out with some assets. But I was certainly very cash strapped for a while when going through that. And then I guess I sort of sat down and thought to myself, well, what is actually important to me? And for me at the time, what was really important was having a roof over the head for myself and my kids. Like financial independence had always been really important to me, but that experience really solidified it for me. And I guess a lot of people with family can really relate to that. Well, you don't even have to have family to relate to that. It's maybe something that is intrinsic for many of us. But especially when I had young kids, I just really wanted to feel that I had that security of a home over my head and that security of owning it outright and never having to worry about negotiating with a bank or any other problems like that or a landlord or anything else.
Serina, can you tell us a bit about what inspired you to write this book and maybe a little bit about the process behind putting the book together?
Well, I'd like to think I came up with the title, but I didn't. I owe that to Leslie Williams from Major Street Publishers, who actually approached me. So I had been in contact with her last year about another book idea, and that didn't, for various reasons, come off. But, I'm a big believer that sometimes if things don't work out the first time, whether it's for a job or anything else, you still keep in contact with people. And I love what she does, and I've had a number of her authors on my podcast. And then quite out of the blue in February, she contacted me and said, I've got this idea for a book, Serina, and I'd like you to write it. And the brief was to write it really quickly. So originally it was 30,000 words, I think in about 10 weeks. And I went, yep, sure. Ended up being double that amount. And, I got a little bit more time, I think. So I can't remember. I think it was about mid-February she contacted me and I had it done by just after Easter. I don't recommend that to anyone, by the way. It's not a normal kind of time frame. And I guess in some ways, a lot of my writing was a bit rushed with this. Certainly not my sums or other things, but I'm a big believer in imperfect action. Like there's never a perfect time for anything. That said, I do feel that it was a perfect time for this message, for this book. A lot of people were hurting and a lot of people are hurting even more right now. In fact, I read a report today in the news about, the amount of Australians who are under housing stress for rents. So it's not just mortgages, it's also rents. So, 30% is kind of that magic number. If you're spending more than that of your income on housing, you're really in housing stress. And I think increasing numbers of Australians are right now, and that's something we really need to recognise.
For sure, and that's a nice segue into my next question. So I understand you bought your first home, I think, in the early 2000s.
Yeah.
Do first home buyers in particular have it harder these days? And what have you noticed just, through being an author and having your finger on the pulse a bit, how it was buying a home, 20 years ago? It sounds crazy that 2001 was 20 years ago, but here we are. How does that differ to maybe these days?
Oh my God, where have the last 20 years gone?
No.
It's just crazy. It feels like only the other day. I'm not a big fan of intergenerational warfare because
Mm.
it just doesn't really help people. You just end up feeling angry and bitter, and it doesn't really help or solve the problem. And I was very conscious of this when I wrote this book. In fact, I deal with the whole intergenerational issue in one of the chapters early on. And I was really insistent that I wanted a younger editor for this book because I really wanted to make sure that I got the tone right. Because I know that particularly younger people in Australia are really sick of being told that all they have to do is suck it up and have less lattes and have less brunches. And it's not really their problem. It's, other people have done it hard in their days. So I was really conscious of wanting to make sure that the book felt really inclusive, but yet was also practical. I think anyone who's buying a house finds it difficult. Pretty much. Some people might be really lucky and their parents might buy them a house or they've got an inheritance and it's super easy. But for the majority of people, that whole process is difficult for anyone, no matter what generation you are. Certainly, the amount that people have to borrow these days is much greater than ever before. It's unprecedented. And in terms of looking at the affordability, in terms of how much people are earning versus how much they have to pay for, that amount is also unprecedented as well. So, there are certain aspects here that make it very challenging in today's environment. Some people really do feel like they're locked in and they're never going to get out of that. And I understand and I hear that. But just saying that it's harder today sort of doesn't tell the full story because every generation has its differences. And certainly there was a time when it might have been easier, say, for a middle-class white male to say, get a loan for a property, but it wouldn't have been easy for someone from a culturally and linguistically diverse background or, a woman, especially a single woman. In fact,
it's also, like your own journey as well.
Yeah. For a long time, single women particularly were locked out of property. And also too, the revolution in digital finance means it's a lot easier to, pay more frequently, to shop around, to get better deals. There are a lot more things happening. So I don't think you can really compare in that way. But I would say that there are definitely some challenges for people today. And I don't want to dismiss, the hardship and the anxiety that people are experiencing right now.
Serina, one thing I quite like about your book is that, it's not all about just, living on tuna and rice and never going outside the house. You can still pay your mortgage off quickly while still having, enjoying yourself a bit. So can you tell us a little bit more about how you can have fun while paying off a mortgage?
Oh, I love that good tuna and rice stir fry or in a slice. But, the reality is we can't survive like that forever. And I really do believe in enjoying our life while we are doing things. And, I sort of think like joy is a funny thing. Like what gives us joy is different from other people. And it's not necessarily spending a lot of money on things. Like, for instance, I've recently been doing a jigsaw puzzle that I was given as a gift. And I spent hours and hours of fun doing that. And it sort of cost me virtually nothing. So I think often we need to think about what it is that we really want to do and what actually gives us joy, because it's not always what marketers tell us is the answer to that. And I guess that's the first thing. The second thing is just to think about our friends and our community as well and think about how we connected with them, because there's a lot of research that talks about happiness, coming from that. And a lot of, community things don't necessarily cost us a lot of money. I referenced several times in the book my lovely frugal friend Trish, who we met online about 18 years ago in a savings forum, actually, that we share very similar frugal values. And so when we catch up, we're often talking about frugal tips. We're often sharing frugal advice. So it doesn't actually cost us a lot to do that. But that said, there are times when people do actually want a holiday. We actually do want a break. We actually do want to enjoy some nice things. So there's a particular chapter in the book about traveling frugally and how you can make the most of that. And that came about, I pushed for inclusion in this book because I had a lot of feedback after the Joyful Frugalista that I hadn't covered travel. And I think too, like particularly for first home buyers, it's when they are buying a house, it's often at that same time in their life where they're thinking, well, maybe we should travel right now before we have kids. Maybe we should also have a wedding. Maybe we should also landscape. Maybe we should pay off our mortgage. There's a lot of things happening. So if you're saying, particularly to young people, you should never travel because you've got this house, it's sort of, it doesn't become much fun then, does it? You're like, it feels a bit like your house becomes a jail rather than an enabling place of love and joy.
Certainly don't want our homes feeling like a jail, Serena. But that kind of feeds nicely into the next question. So there's probably a lot of young would-be home buyers listening to this, or at least reading your book, due for release soon, that are kind of maybe single, or they've only found, love maybe a bit later in their life. They haven't married their high school sweetheart. They might have spent their early 20s traveling or buying a nice car maybe, or having a nice holiday. But what would you say is generally maybe like a more realistic scenario? Should they wait till they find the right home and save up more, continue saving for God knows how long with a partner, or wait for some more money to come through, or should they just get their foot on the property ladder? What's the better sort of method, and certainly what has it been like in the last 10 years or so?
Yeah, great question. And the trends have really changed. Like when we bought our first house, the sort of trend was towards doing up houses. Like my first property, my ex-husband and I bought, was in 2001. I was going to say 2003, but I think it was actually 2001. But in the 90s, renovating was a big thing. I mean, I know it is now too, but it was, more of that fixer-upper rather than necessarily making things super, super, super glam. And that was kind of the trend, really, that you bought somewhere pretty ordinary and then you sort of upgraded and you upgraded and upgraded. But, in recent years, particularly the last 10 years, there's the trend now is for people buying their forever home. And, I guess there was that part of me, and it's probably generational, who sort of thought, why wait for your forever home? Why not do it tough and have that place out in the sticks that needed a lot of renovation, put a bit of effort into it and, do it up. But I can sort of see the benefit for both. And I know that probably sounds a bit hedging, but I can sort of see that when you're moving all the time, there's a lot of costs involved. There's, all the removal costs, there's all the, the costs of stamp duty, there's agents' fees. And I think those sort of fees are getting increasingly expensive too. As housing prices go up, a lot of these things are done by percentage. So, the costs of moving around are actually getting quite difficult. So that model, I guess, that we used to see, 20, 30 years ago of sort of upgrading is actually getting harder and more expensive to do. It's not impossible, but it is getting harder to do. And I guess too, people becoming more conscious too about, as they have families, of wanting to be in a community and not moving around all the time, to actually sort of stay put and put down those roots. So I think, there is a little bit, it really does depend on where you are. I personally do worry about some younger people who are getting into very large debt to buy large forever homes. And I feel sometimes that then means that you have people working very long hours so that their furniture can enjoy living in a life that they would enjoy, because they're never home unless they're working from home, to sort of enjoy that. And that can be a bit of a treat. There is certainly a lot of value to be had if you are handy and can do up a place. So I think, for me, I prefer to live somewhere that's not as expensive, particularly for a first home. And noting the importance of compound interest and how it works too. Like if you've got a smaller principal amount to deal with, you're not going to spend as much on interest in the long run. And that's something really important to think about. So that's a very long-winded answer, but I guess I kind of am more in favour, and this is probably generational and represents my background. I'm more in favour of starting small, paying down a lot of debt, and then building on from that where possible.
And Serina, this is a bit of a, on a similar theme, but there's a bit of a trend lately that we've been hearing about, particularly among younger generations, that just feel like the housing dream is just becoming so out of reach that they're calling it quiet quitting the housing market, where they're just basically giving up the dream completely and just thinking, no, it's too out of reach. I'm never going to afford a home of my own. I'm just going to live it up now and not worry too much about that stuff. What do you make of that? And what messages would you have for people who are quiet quitting the dream?
Well, I guess there's two. One is that the sort of dream of home ownership in a major capital city is becoming quite difficult. But what's really exciting is that the ability to have remote working arrangements have meant that we've got a lot of young people coming into rural areas now and regional towns. And I think this is really fabulous. Like for a long time, it was the other way, that young people were flocking to bigger cities. But now we're starting to see people coming back. And it's a really positive thing, I think. It reflects different values too amongst younger Australians who are really increasingly valuing the environment, sustainability, community and family. And these are very exciting things. So I guess that's the first thing. Then the second thing to consider too is it's not just about owning a house. It's also about your long-term financial situation. Like you don't know what's going to happen in your life. Like my lovely husband, he had a major heart attack 5 years ago. And now thankfully he was able to go back to work. But, we would never have thought that he would have had that in his 40s. And I know people who quite young in life have ended up that they're not able to work, or they've got caring responsibilities for extended family that they hadn't thought about. So it's very risky when you have, the attitude that because I can't buy a house, I'm just going to go out and spend money, because you just don't know what's going to happen. And you might not want to be in that job all your life. The amount of times that workplaces become toxic and then you're stuck there because you have no savings. So I think it's incredibly empowering when you're in a good financial situation, because it means you've got choices. There's things that you can do. So it's not just about the house. It's about the broader picture about your financial situation.
So without giving away all your secrets, what tips and tricks can would-be home buyers expect in this book that's coming out soon? And how was it writing a book, sort of post-COVID, coming out of COVID?
And, thank you. So there's broadly 3 parts to the book. So the first part is dealing with the scene setting about, just actually how much you have to pay, and mindset and some financial tips and tricks. The second part is probably what most people would expect to hear from me, and that's a whole section around about frugal tips and tricks and hacks and so forth. So it covers everything from cleaning hacks to transport to, various other things. And I'm very proud that there's a lot of new things in there that I've never covered before. The last part of the book is a little bit different because it includes actually a whole chapter called When Shit Happens. So it's not just dealing with how to pay off your mortgage, but, invariably you probably have a friend or a relative who is going through hard times, and it really will give you tools for how to talk to that person, how to help them, where to direct them. Or if you yourself are having problems, because let's face it, we're living in very uncertain times, so you never know kind of what's going to happen. There's also advice about what to do after you've paid off the mortgage, whether or not you decide that you want to keep your mortgage line open, or whether you want to discharge it or not, what other sort of financial goals you should have. So it's a 3-part in the book. And about writing it post-COVID, yeah, it was interesting because so much of our life has changed now. And I really had to reflect back when I wrote The Joyful Frugalista. It was in 2018. Some of the things that I wrote there were no longer as relevant. I mean, for instance, transport is important, but we've got working for home options now. A lot of how we shop has changed as well. There's much more of a trend towards online. There's been supply chain issues. There's a whole range of different things and considerations. And even one of the things that took me by surprise is, traditionally when we talk about things like transport, you talk about the depreciation costs with a vehicle. Usually you buy a car and it depreciates rapidly. But guess what? During COVID, the price of a lot of vehicles actually went up. So then it's a whole different discussion. Yeah, not about making a loss if you sell a car, but how you might actually make a profit. So there were a lot of things that had changed.
Serina, I'm afraid we're just about out of time, but just before we jump off, I thought I'd show our viewers, this is the book, How to Pay Your Mortgage Off in 10 Years, which I believe is on sale tomorrow, so exciting times.
Yes, 25th of July for everyone wondering.
Yes, 25th of July for those listening to the live podcast. Serina, really appreciate your insights. Thanks so much for joining us here on the Savings Tip Jar.
Thank you so much for having me.